Good morning and welcome to this Wednesday, October 23rd edition of Trading Places Live at earningsbeats.com. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. All right, got a lot going on, so I'm going to jump right in. I will tell you right now I'm having some internet difficulties, so hopefully we'll be able to get through this okay. But in preparing for the show, I've been having some difficulties, so just want to let you know in the event that it continues. Let's take a look at what happened yesterday in the market. And before I get into it, I do want to just remind everybody, if you follow my stuff, you probably know from a historical standpoint, this is a time of the year we want to be a little bit careful. October 22nd through October 27th is the worst week of the year historically. Doesn't mean it goes down every year, but and it does tend to be worse when the market is in a bear market versus when it's in a bull market. But still, it's worth noting the average annualized return on the S&P 500 from October 22nd through the 27th is minus 43%. And that goes back since 1950. So that's 70 years worth of data. This has historically proven to be a very difficult week. So just keep that in mind. I know we had some reversals yesterday, and that was the start of this particular historical bearish period. Whether or not that continues, I don't know. I don't suspect that we're going to have a big move to the downside, but you can see the S&P 500 yesterday put in a bearish engulfing candle right at the recent resistance. Anything at 3,000, 3,025 level has been difficult for the S&P 500. The NASDAQ got up right up to 8,200, where you can see we failed in September. Also printed a bearish engulfing candle. So I wouldn't be surprised to see some additional struggles this week just based on history. Now, given the current technical setup, I believe the stock market's going to go higher. So I think that this is maybe just something short term that we have to deal with. I see a lot of positives in the market. Unfortunately, I see a lot of shifting. Some of the things that were working for several months and even going back the last few years have not been working over the past quarter. So I do see a changing of the tide here a little bit. But overall, I believe the stock market's going higher. You can see yesterday the Dow finished down 39 points. The S&P 500 was down 10 3/4. The NASDAQ down 59. The Russell 2000 up 13 points yesterday. Actually, that's showing the day before. I think that was down as well. I'll try to get an updated price on that. 10-year Treasury yield, 1.74%. This is showing today's action, so it is down 3 basis points. And, of course, we've talked about this before. There is a correlation between the direction of the 10-year Treasury yield and the direction of stocks. So anytime we're pulling back on the yield, it means money's getting a little more defensive, rotating into Treasuries, and that can create some headwinds for the stock market. So I don't like the fact that we're pulling back, but I do like the fact that we've been in this uptrend. So holding that rising 20-day moving average right around 1.70%, I'd like to see that happen. And then I'd like to see the 10-year Treasury yield bounce, go back up above 180. Yesterday's action, looking at the various sectors and industry groups, energy led on the day. You can see energy having a pretty nice day there, up 1.29%. The XLI performed very well. Transports really performing well. But here you can see the XLI up 0.75%, a little bit more than that. Transport's up almost a full percent, and it has been a straight up move. Transportation stocks, when they get rolling, they tend to lift the S&P 500 overall U.S. equities. So we really want to see the transports performing well. This is one of the catalysts that I've been looking for to support my thesis that the stock market's going a lot higher, and we are getting a lot of movement to the upside, and the volume has really been picking up in transports. So got really a win-win. Just need to break this level here. And from a longer-term perspective, I want to see us get through 11,000. I think if we get through 11,000 on the transports, I think the market is really going to roll. Technology, not so good yesterday. You can see after holding on that 20-day moving average, yesterday we went down and finished just beneath the 20, holding on to gap support, though. So far, if we can't hold that gap support, I'm not going to be bearish technology, but in the short term, you know, we've got double top in here. We've got a number of different places we could go back to. 50-day moving average would be 1. You've got this trend line that comes in that's probably around 79 right now. That would be another level. The recent October low down around 78. That also coincided with the early September low around that same level, 78. So there's all kinds of areas we could move lower in the short term, still be fine in the longer term. But I didn't like that close below the 20-day yesterday on technology. The big reason, software. Software has just not been able to get going. Software was an area of the market that's been leading for the past few years. Maybe it's runs over. Maybe it's going to pass the baton on to some other areas. A breakdown below the the August and October double bottom would not be a good thing for software, and we are very close. Got some earnings reports out, so we'll take a look at a couple of those stocks, but right now software is struggling for sure. Looking at the sector summary from yesterday, mentioned the energy group leading, industrials doing well, technology down here on the bottom, communication services also struggling, consumer discretionary not very strong, and that's a little surprising given that over the past month we've been seeing a lot of consumer stocks beginning to strengthen, and I find that to be very bullish as well, both consumer discretionary and consumer staples. We'll get into that just a bit. Industrials, look at I talked about the transports, railroads leading the industrials, truckers right up there, not too far behind. A lot of transports doing very well yesterday. If I pull up the railroad chart, you can see that railroads have been going straight up for about the last 2 weeks, and we actually have cleared the September high. This is a chart looking pretty good, and if we go back on a long-term chart, you'll see that there's still an uptrend in play on the railroads. I know it's been a weak group for the past 5 months, underperforming, but we saw 3 months back in the fourth quarter of last year where we underperformed, 4 months during the first 4 months of 2018, actually. You can see back in 2017, we went sideways for several months. It's okay to consolidate for a while. The overall trend here is higher. We continue to put in higher highs, higher lows, higher highs, higher lows. We got a double bottom, and now we're breaking out above that intermediate top. I think this is a really bullish candlestick on railroads right now. We'll see if it sticks through the end of the week. All right, let's take a look at the truckers, because truckers also up here. Really want to keep an eye on these transportation areas. Truckers making the breakout above the September high. Another very, very bullish development within the transports. I think we're going to make a push for this 9.25 and eventually break out. I'm looking for truckers to lead the transports to the upside. They've been leading. Look at this action here over the past 4 or 5 months. As railroads have been struggling and consolidating, truckers have moved back up above their 20-week moving average, and each time they pull back, they hold that rising 20-week, which is now above the 50-week, so we've got a golden cross. PPO looks good on a weekly basis. I think the truckers look really strong heading into the balance of 2019 and probably into 2020. All right, let's go back, and I wanted to pull up the technology group. You can see software down here just not performing well. Showed it earlier, but let's get it on a little bit bigger chart. You can see that this bottom down around 26.25. We have a double bottom. Again, it's okay to consolidate. I'm not ready to write the group off, and even if we break below this low, I wouldn't write it off. But in the short term, if we can't hold 26.25, that brings that June low into play, which would be very concerning if we were to go back that far. On a weekly chart, you can see that we had been pushing higher. We're a little bit below the 20-week moving average, but a lot of times when you look at the daily chart, that looks horrible. You go to the weekly chart, just kind of take in the big picture, and things can look a lot different. And so I always suggest that you kind of back up and look at what's going on in the big picture. Fourth quarter, it looked like software had completely fallen apart, fourth quarter of 2018. The stock or the group went from 2,400 all the way down to 1950. So that's 450 points. That was close to 20%. So even though it went down, it actually outperformed the S&P 500 in that period. Part of the problem right now is that it's going down, but it's underperforming the S&P 500. If the S&P was going down and software was going down less, it wouldn't be so bad. But because it's been going down a little bit more, and the way you can look at this is by just simply typing in the symbol $$ SPX. And I'm going to go down and put this on a line chart. And let's take a look at it. And this is what I was talking about. So in the fourth quarter of 2018, the group was going down, but it was still outperforming the S&P. Now it's going down and it's underperforming the S&P. So this gives me a little bit more reason to be nervous, especially if that 26, 25 area doesn't hold. All right, let's take a look at some earnings reports. I know Texas Instruments have reported this was not good and is not going to help technology, is not going to help the semiconductor group. The stock, let me give you an update on where it is right now in pre-market. Texas Instruments trading down, make sure I got the latest. Trading down $10.33 to 118. So all the way down here. I think it needs to hold this low. I think after moving up, we pulled back, established a very important low. There was a lot of volume in here. Set a low. We do not want to go back down much below about that 117 area. So we're looking to open around 118 and change. I would look for a hollow candle today. Otherwise, probably going to be a big drag on the semiconductors. Next earnings up, CMG. This is one of our portfolio stocks. Stock actually came, and by the way, Texas Instruments beat on the bottom line, 149 versus 141. Chipotle absolutely crushed the bottom line, 382 versus 320. But, as I've said so many times, a lot of it looks like it was built in. Chipotle down $19 before the market opens today. So it is at 812, which is here. I still think we're in an uptrend. I would watch the 780 area. I've been talking about that being major support for Chipotle off of this uptrend. I think it's fine to sideways consolidate for a bit. So we could see a little bit more weakness consolidation here. But I would expect longer term that Chipotle breaks out again to the upside. On a weekly chart, and this is maybe a reason for a little bit of pause, notice back in August of last year when we were moving up, the weekly PPO did not confirm, did not move to a new high. And see what happened? We consolidated for a while before we broke out again. Well, as we keep moving up, the PPO keeps dropping. I mean, it hasn't really impacted the stock much, except that maybe we've gone sideways for the last 2 months. But it could drop further back to test that center line like we saw all the way back in December. And if that happens, then I think your 20-week moving average comes into play. And if that doesn't hold and that price support level doesn't hold, it could get a lot worse for CMG down to that 50-week moving average. I don't think it's going down there, but we do need to at least be aware of the negative divergence on the weekly chart. All right, next up in earnings. How about Snap? Snap came out and reported a 4-cent loss. Market was expecting a 5-cent loss, so a little bit better than expected. And the stock's down 7 cents pre-market. So after getting through the 20-day yesterday, it failed, came back down. That is a bearish dark cloud cover candle. It is trading a little bit lower this morning. I think we're going to go back and retest that 1350 level. That needs to hold for Snap. Looking at it on a relative chart, and I'm a little bit concerned about the internet stocks turning back down again here relative to the S&P 500. October is generally a very strong month for internet stocks. A lot of them are struggling. You can see Snap relative to the S&P dropping, relative to the internet stocks just recently hit about a 5-month relative low. So it hasn't been performing well. Did beat on the bottom line, but if it can't sustain that move to the upside and it comes back down and breaks below 1350, I think you have to respect the current downtrend that's in play. Next up, how about Teradyne? Teradyne, another semiconductor, another one of our portfolio stocks, really like it. Came out 77 cents versus 70. So it did beat on the bottom line. The earnings or the reaction to earnings is a positive one. Teradyne is up $3.77, so it is up 6.37%, breaking back up above this prior high. You can see the last couple of earnings reports we've had, last few earnings reports, we've had heavy volume and big moves to the upside on Teradyne. Looks like we're at least going to get started along those lines as well again today. Next up in earnings, Whirlpool. Whirlpool beat by a penny, 397 versus 396. Let me bring that chart up for you. And so here's the move to the upside. I really liked this chart going into earnings. I felt like they would beat the numbers. But again, how much of it is built in? Well, apparently there was something built in because Whirlpool is down $6, down 3.81% today to 154. So it is back down 154.50. So it is right back in this area. I would say watch this gap support down around 150 along with this rising 50-day. And look at the other tops here. Had a double top at 150. Came back down just a little bit below 150. I think the 140, I'm going to say 147.5, which is right about where that 50-day is, up to 150. I think as long as Whirlpool holds there, we're okay, but it is going to get off to a rough start today. Let's see, another one. How about Skechers? In the footwear space, Skechers, or the footwear stocks have been on fire. Skechers, let's hope we don't have this problem. Let me try. Another one here. I've been having this issue where I'm not getting a feed from stock charts, and I'm pretty sure it is on my end. Well, what I can tell you is that Skechers did miss 67 cents versus 69 cents. And let me give you the pre-market. It is down a buck, 2.63%, down $1 to $37. So right now I can't take a look at the chart. We'll try to pull that up in just a second. I'll give you a couple more of these earnings. You can maybe pull up the screen or pull up the charts on your own screens. Manhattan, this is a software stock. So just talked earlier about software and how we need some catalyst. We need something to get the software group going. Manhattan, 51 cents on the bottom line. Market only expecting 36 cents. That's pretty good. There is a bid. I'm not seeing any pre-market trades, but stock closed at 74.60 yesterday and has a bid of 77.27. So things are looking pretty good there. I'll try and pull the chart up, try again. Maybe we can get it. Nope, still not working. Okay. Actually, let me try maybe just pulling up another window. Maybe that'll help. No, it doesn't want to give me any charts. Oh, well, I'm just going to have to go over some of these. You'll have to pull them up individually, perhaps. But Manhattan is showing a bid of 77.27. So that would be up $2.67 from yesterday's close, which would be somewhere around 3.75%. So Manhattan at least trying to do its part in terms of earnings. Let's see what else came out. Oh, MTH. This is another portfolio stock of ours. Meritage. And I will give you, well, the bottom line, they crushed 179 versus 149. So it wasn't even close, but this stock had a lot built in. Let's see. Earnings, it's showing up 41 cents after earnings. So this morning, up about another 0.5%. This has been a really good performer. It's currently trading 75.48. Its 52-week high is 76.39. So it's only about 1% away from its 52-week high. Another earnings report, Boeing. I did not like Boeing going into earnings. I made that pretty clear. 145 versus 204. Ugly report. But the stock's been hit so hard lately, we're getting a little bit of a rebound. Stock is up 685. I don't know. I don't think it's going to last for long. So let's see if I can get the chart up. Hey, we got one. All right, so Boeing, at least at this point, is up $6. So we're talking about maybe getting back to this gap resistance area, 343.85. The inspect button there is 344. So it looks like it's going to gap up close to that. I wouldn't be surprised to see a move back down, maybe a bearish engulfing candle on another test of the low that we saw back in August. I'm not a fan. Now, Boeing has been beaten up pretty badly. So maybe we get a little bit more rebound, but I do not like the stock, would not touch it. And again, with those earnings coming in as weak as they did, I think you got to be careful. All right. Let's see. Some more earnings out there. Waste Management, another one of our portfolio stocks, beat 119 versus 116. Let's see what this one was looking like on its chart. And I can tell you the reaction, down 91 cents. So about 0.75%. So it tried to make a breakout yesterday, failed. Earnings were good, but apparently not strong enough. Stock back down to 116.01. The 20-day moving average is 115.98. So if it wants to keep this uptrend in play, maybe we see a reversal off the open. If it doesn't, if it goes back down, I think you got to look for all of these lows down here around 113.5. And if that doesn't hold, major low back in September down around 111. I suspect we're going to see Waste Management turn higher, but we'll have to wait to see. All right, I think that's going to be it for the earnings reports. There were some upgrades, downgrades, so hopefully I'll be able to get these charts to you. Hopefully my charts will stay up for a few of these upgrades, downgrades. Biogen getting upgraded twice today. Of course, yesterday they had their news. Yep, not going to give me my chart here. They did have the news out yesterday that their Alzheimer's drug, they had some positive trial results. And so that certainly was a positive there. The stock had come back down quite a bit from the open. It is up $5 today, though, in pre-market. So yesterday it had opened at 310, closed at 281, which was still up 26%, by the way. It was up $58. But it was up an additional $29 at the open yesterday. So with the upgrades, it's getting almost a 2% pop this morning. Next up, Coca-Cola getting an upgrade. Coca-Cola in pre-market is trading up about 0.5%. Kimberly-Clark getting an upgrade. Kimberly-Clark not showing any kind of movement in its price. Pre-market. Snap, I already went over, got 2 upgrades this morning and still down. Not a good sign. And then Travelers got upgraded. This is a stock that really did not do well after earnings yesterday. I did not like this one going into earnings. TRV was down 8% yesterday, down $11 to 130. It's down another quarter this morning in pre-market, even with an upgrade. Although the bid is slightly higher than the last price, so maybe it's going to open up a little bit. All right, 3 you must see. Well, hopefully you're going to be able to see them. So actually, before I get into 3 you must see, I do have the relative strength industries. This is a list of the groups that are leading the S&P 500 by the most over the last 1 month period. So if you pull up, if you have the relative strength, in the industry relative strength chart list that we have, if you're an annual member at Earnings Beats and you're also at least an extra member over at Stock Charts, we send you this chart list. And you can see there's a lot of charts in it. It's all the industry groups. And one of the neat features is if you pull up, if you hit the view as, I don't want to go back and show, well, maybe I can do it over here. So if you hit view all, if you were in the, let me pull it up here, relative strength industries. And it's not showing me the charts, but it will show you how you can get in. So here you just go into view all, and it'll show you view list as, and then hit the summary. And that's when you get what I was just showing you over here. All right. And then you'll have intraday as the period. So it'll just be showing you that day. So you got to go over here, the drop down, and click on the 1 month. And this shows you now, I clicked on the percentage change at the top of the chart. And so this now gives me all the groups and how they have performed relative to the S&P 500 with the leaders on top. And while I'm not a big tobacco fan or tires fan, I do like what's going on in recreational products. Just wrote about that this morning in my Trading Places blog. But if you look down here, look at this. You got consumer staples, consumer discretionary, industrials, consumer discretionary, technology, consumer discretionary, consumer staples, consumer discretionary, discretionary, industrials. Are you starting to get the theme here? It's industrials, it's consumer discretionary, it's consumer staples. That is where a lot of the money is going right now. So recreational products I wrote about. I'm going to see if I can bring up this chart here on the clothing and accessories. You can see it's outperformed. This is not telling us that the clothing and accessories is up 7.5%. It's telling us that it is up 7.5% more than the S&P 500. So when we look at this, we do have the chart. Good. Take a look at the last 2 months. All of a sudden, we're getting this big move. Now, we've seen temporary strength before. We need to see this break through that 50. We need to see the relative PPO turn positive. We want it to start looking like it did over here. See how we went up strongly, pulled back for a couple months, and then broke out. When we finally got this breakout, and we finally got this breakout, that was when we wanted to be much more interested in the group. So this is getting my attention. I'm not ready to just start pouring resources into clothing and accessory stocks, but that is certainly starting to make some noise. All right, the other one, let's look at the apparel retailers. And this one has broken above the 50, the 20, above the 20, I don't know, a month ago, now above the 50. And the relative PPO just turned positive. And if you're looking, wondering if that's positive or not, if you go back over here, next to the PPO, that black number right there, it's a positive 0.038. That is coinciding with the black line. This is coinciding with the red line, which is the 9-day moving average. And then the green right here, plus 1.021, is the histogram. That's what the histogram reading is. And the histogram is simply the distance between the black line and the red line, just a little, so you know, kind of a piece there. All right, let's go ahead and jump into the 3 you must see. Hopefully we can see these. If not, again, you can pull them up on your own. HOG, H-O-G. Okay, we do have it. Loved the breakout here with the volume. If I pull this up on a relative chart, hopefully I'll get it. Yes. You can see we made our move all the way up to 40 to test this high, but we've got a beautiful uptrend. Any kind of a pullback to test gap support or the rising 20-day moving average, I think looks good. It is outperforming the autos by a wide margin over the last 7, 8 weeks, and it is at a 52-week high relative to the autos, breaking out relative to the S&P as well. So that's a chart we definitely want to keep an eye on. I think HOG looks really good. I won't annotate these, but just happy to be able to point them out. Next up, PCAR. Now, this is in the, I want to pull up, hopefully I can get this chart for you. There we go. Commercial vehicles and trucks. Look at this move to the upside, taking out the September high, and then now challenging that double top from back in July. A breakout above 2050 here would be very, very bullish. So if we go back to PCAR, now we've got the group, which is showing this move to the upside. Look at the relative strength all of a sudden. Commercial vehicles and trucks moving to, well, it's almost at about a 6-month relative high. And look at what PCAR is doing. It's one of the stronger stocks in the group. Big volume, making a breakout. This is a stock on a pullback I would be very interested in. So you want to make sure you keep an eye on this. And then a final one, I actually talked about this one once before on 3 you must see. I'm going to go back to it because of what's going on with consumer stocks. Nordstrom's making a breakout yesterday. So I think I talked about this looking like it was a character change, making a breakup to the top above prior highs, pulling back, holding on to the 20-day, printing that little hammer there, and now we're back on the move to the upside. If there was one negative, I could have used a little bit more volume yesterday. Maybe we'll get that today. But I think we're in an uptrend here on Nordstrom's. And it had been down in the dumps for a long time, but it's starting to turn back up. And apparel retailers now at about a 5-month high, relative high. So those are some interesting charts to keep an eye on. And as you can see, things are starting to rotate into different areas of the market. We got our finger on the pulse. We'll be talking about a lot of these stocks in our daily market report that comes out every day. So if you're not a member, please check that out. All right, want to wrap this thing up. Thank you so much for joining me today. Please remember to tune in to Trading Places Live from 9 a.m. to 9:30 a.m. Mondays through Fridays here at Earnings Beats on Mondays and Wednesdays, and over at Stock Charts TV on Tuesdays and Thursdays. Also, be sure to check out my blog, Trading Places with Tom Bowley, every morning, just about every morning. And everybody have a great Wednesday. Happy trading.